Hey guys, what's going on? My name is Zach here at the Divine Dividend, and today I want to talk about a hot topic right now. It's on your friend's mind, it's on your mom's mind, it's on this 13-year-old kid's mind. Is Bitcoin a legitimate investment now, or are we still seeing it as a speculative opportunity? So that's what I want to dive into. There's a lot of things we got to talk about, so sit back and let's get into it. Before we get too deep into this, I just want to bring up CoinGecko versus CoinMarketCap. They give very similar information. You can find out volume on exchanges, weekly volumes, weekly prices, all the charts, etc. However, compared to CoinMarketCap recently sold out sometime in the last year or so, 6 months. But now they basically sell your data just like we're used to with Facebook and Google. Basically it says if you communicate via email at all, so you have a trouble ticket support, they have your email address, anything. If you do a survey, obviously you're willingly giving it up to it. They do collect your financial information provided by the user, and they also collect your IP address, geographic location, date and time of your request. Okay, so if you're worried about your privacy and anonymity at all, I would suggest you guys go to CoinGecko just for a little bit safer viewing. All right, back to what we were talking about. So Bitcoin, just like any other asset out there, does move in cycles, and these are typically triggered by the halving. And the halving is basically the amount of Bitcoin created every day is cut in half, and this event happens every 4 years. So once again, Bitcoin blasted past its previous all-time high of 20K, and in the last couple of months we've just been shooting up, essentially doubling the price, and we're sitting at just about 40K right now. And just like with any stock or cryptocurrency, as soon as something passes its all-time high, this is where a lot of new money comes in. So whether you're a retail investor, or in this case, a lot of hedge funds, just Wall Street money is coming into the market. And this is what I want to talk about, something that adds a ton of credibility to Bitcoin as a whole. For the longest time, Bitcoin headlines used to be, Bitcoin drops 80% in 3 days, or people are just using Bitcoin to buy drugs on the Silk Road, or people are using it for money laundering, or people are using it for tax evasion. Just the list of negative things was outweighing what Bitcoin was doing in the space. Couple that with the fact that you have Warren Buffett, Charlie Munger, and Bill Gates on this interview, coming out and publicly showing that they are just clearly not in favor of Bitcoin. And since Warren Buffett, one of the most successful investors of all time, Berkshire Hathaway being one of the top 10 most valuable companies in the world, these people coming out here, public figures, expressing their dislike for Bitcoin. Watch this little clip from Fox Business.
Charlie, we were talking about that and all that happens when it comes to new things on the cusp. 2 years ago, Fox Business asked you about Bitcoin when it was very, very much in its incipient stages, and you called it rat poison.
Yes.
Do you still feel that way?
I was holding back a little.
Even with the fact that more Bitcoin companies have come up, you still are not a believer?
That's correct. I think maybe the government should keep issuing the currency.
Do you think that it should be regulated?
I wish it would go away.
So granted, this interview took place at the end of 2014, but you can just see their sentiment. Like, one of them makes a joke about it and they all start laughing. Nobody can take it seriously. And that brings us to today. Okay, so this is updated, real time, and this is showing total assets by market cap. So gold in the lead right here at 11.6 trillion. All right, then you start getting some of the most notable companies in the world. Apple, Saudi Aramco, Microsoft, Amazon, silver, another commodity. And if we scroll down just a little bit, there's Bitcoin at number 12. It's literally one of the most prevalent commodities and assets out there. And now it's just talking about Bitcoin. If you look at the total market cap of all cryptocurrencies combined, we're at over $1 trillion. So putting that into perspective, we'd be sitting at, number 8. We'd be just over Tesla, just over Tencent, over Facebook, over Alibaba. These are major companies having a worldwide impact. So that, that's actually where cryptocurrencies stand at the moment. Now, there are certain things happening that kind of stress me out a little bit, like when the general public invests in Dogecoin, which is literally a meme, and all of a sudden it's less than 1 cent and people are like, oh my god, I can buy like 50,000 of these and it doesn't even cost that much, hoping it goes to $1 for literally no reason. Like, the developers have abandoned the project, no one is making any benefits, it just happens to exist and people are buying it. I don't even know why Robinhood supports it. That's another thing. Robinhood only supports trading maybe like 5 cryptos. So someone who's never heard of it decides that, or figures out they have access to it and buys the cheapest one. Yeah, obviously it's gonna, it's gonna skyrocket for no reason. But alas, stuff like that makes me wonder, like, who's actually investing in Doge. And then I just realize, what happened at Hertz after, in May, when they basically announced they were going bankrupt. The company had just been falling apart for months. And then all of a sudden it's less than $1 and everyone's like, oh my gosh, it's so cheap, I can afford it. It pumps up for literally no reason. Wall Street was mocking retail investors, and anyone who got in and out in this short amount of time made money. However, people who bought at the top thinking, oh my gosh, it's probably going to go back to like $20 or whatever it was previously. So many people got burned, and people are just investing in things without really knowing what they're talking about. So I guess that's really the point of this video, is like to actually look deep down into Bitcoin and see what opportunities have actually shown up for it. And not even just Bitcoin, but Ethereum, Polkadot, Cardano, Chainlink, VeChain. These are just blockchain entities that are actually have a lot of use case in the world. And while you can argue that these 3 guys are some of the biggest influences inside the financial world, let's see what the rest of corporate America is doing out there. So if you keep up with the news at all about who's actually buying Bitcoin, it's not just you and me, and it's not people in Russia and China. There are large corporate names getting out there, and Grayscale's been doing it for over a year now. So they have Grayscale BTC, which just basically makes massive purchases. And just the other day, a purchase of over $600 million worth of Bitcoin was taken off the market. So the circulating supply is just getting diminished. There is no circulating supply really, and that's partially why Bitcoin's getting driven up so much, is this institutional influence that's going out there. So this $600 million purchase they did was 18 times more Bitcoin than are produced in a day. 900 Bitcoin get produced a day. Grayscale said, hey, I want 18 times that. All right, so they're going from market to market to market. I don't even know if it's all on one exchange, it doesn't say, but there is only 900 coming in a day, and Grayscale by itself bought 18 days worth of supply in one day. All right, who else is doing some work out there? So this is an article off bitcoin.com, and it's from November of 2020, so about 2 or 3 months old. However, it says PayPal bought 70% of all newly mined Bitcoin last month as demand rockets. So as Grayscale's been buying, more than the supply produced in a single day, PayPal's over here buying 70% of that supply in a single day. So no longer are there any more Bitcoin. I mean, they are getting produced, but they're not really entering the circulating supply because these other companies are just buying it up. Okay, so we also have Square. Square invests $50 million in Bitcoin. So that's another 4,709 Bitcoins in one purchase. This is in the beginning of October 2020. Another company out there, MicroStrategy, announces over $1 billion in total Bitcoin purchases in 2020. So this is taken at the very end of the year. They continue to raise funds, so they will sell some of their stock to get more capital, and then with that capital, they're just buying more Bitcoin. So their purchases are just going up, as well as the price of Bitcoin's going up. The market cap of MicroStrategy has, gone insane. So just taking a quick look at MicroStrategy, and this is a good strategy you guys can use. I know it's a lot of strategy. This is a good strategy you guys can use if you don't want to necessarily get exposed to crypto specifically. You could get into companies that have to do with Bitcoin. All right. So let's just take a look. In the last month, they've gone up 92.97%. The entire company's market cap. All right. So they're sitting at just under 5 billion. However, so that was on December 21st. If we look at December 21st, the price of Bitcoin was 22,000. So as Bitcoin has almost doubled, MicroStrategy has had a 93% growth this month. So that's basically doubling. Those Bitcoin doubles, MicroStrategy doubles. And there's other companies out there doing the same thing. You have Marathon Patent Group, you have Riot Blockchain. There's lots of companies out there that you can benefit from the rise in the price in Bitcoin going up. These companies will go up, and it's a direct reflection. Which leads me to the stock to flow model. So the stock to flow model essentially is a relationship between the price of an asset versus the amount of current supply, and over time, as more supply enters the circulating supply, how the price is going to adjust. Okay, so the first one that really existed, there was one for gold, and it's because we know that roughly the amount that's above ground, and we know roughly about how much is introduced to supply every single year. Well, the same thing can be said for Bitcoin. So this model was created by a Twitter user by the name of Plan B. He's a professional investor, probably somewhere in Europe, I think Germany, people say. Older guy. I think he was talking about his experiences. His first market crash he witnessed was in 1998 when he was already working for a hedge fund, and he's learned a lot over the years. And in 2011 or 2010, when he read the white paper, he was instantly convinced. However, his peers that he worked with were not so convinced. And so the way he went about, trying to shape other people's mind and show them this investment opportunity was to create an actual grounded model. And so just listen to this interview. I'm just going to play about a minute of the clip. Phenomenal interview, by the way. And Anthony Pompliano is the guy who hosted it, and he's probably the most prolific speaker in the Bitcoin space. But listen to this and just hear his thoughts and the way he describes exactly what this model does.
About 10 guys that checked the model and all came to the same conclusion, which gave real confidence. So yeah, it was the thing I needed to take it seriously as a professional investor, and it was also something that could be replicated and checked by others. That's another important thing. The only thing is that the outcome was rather shocking. It was rather high because it predicted, like you all know, a $50,000 to $100,000 Bitcoin price after the next halving, and that of course, it makes you wonder why that is, why it should be so easy to make a 10x on your investment. That's normally not that actually can't be possible. And it also makes you wonder why the model fits as well as it does. So I think that's the interesting question, and a lot of the discussion on Twitter is going about that. So first of all, I think, why does stock to flow work? Yeah, because it measures scarcity directly, like gold, so you can sort of compare it with gold in stock to flow terms, but also in market cap terms. And the scarcer something is, the more valuable it should be.
That interview is actually really good, and it offers a lot of insight, so I would definitely urge you guys to check it out if you have the time. But yeah, he hits on just digital scarcity, and the more scarce something is, the more valuable it's going to be, as long as it has some sort of use case. And if we look at the total supply of Bitcoin, you can see that there will ever only be 21 million. And currently right now, there's 18,605,000. Well, just in recent news, I don't know if you saw this, guys, the other day, a man forgot his password to access his Bitcoin, could lose $220 million. All right. So unlucky for Stefan Thomas, this German programmer in San Francisco, lost access to 7,002 Bitcoin, totaling up to around $220 million earlier this week. All right. He has 2 more attempts. If he gets locked out of his ledger or whatever little device he was using to store his crypto, it is gone for forever. But if we check out this little stat up here, of the 18.5 million circulating, about 20% are currently lost or stranded in wallets. All right, so of that 18.5 million, 20% gone. That is 3.7 million that are just lost and never coming back. No one's ever trading them. No one's ever selling them. They're just locked up. So just say we lose another 300,000 ever. Okay, that'll put us at 4 million gone. So of the 21 million that could ever be, minus 4 million, that puts only 17 million actually circulating, actually flowing. People are keeping it on other hard drives, people are keeping it on exchanges. 17 million around the world is not a lot, okay? And I do say around the world because, to be honest, the US isn't even the biggest market as far as Bitcoin and crypto are concerned. So do your due diligence, all right? Take a look, see if Bitcoin is right or isn't right for you. If you don't want to be exposed to crypto, maybe look at some of those other companies I mentioned. Even Graham Stephan, who's one of my favorite financial YouTubers, recently purchased Bitcoin. And while he's very grounded and very fundamental and very, I invest in ETFs and that's about it, and it kind of manages itself, he advocates for a well-diversified portfolio. So even if you don't truly believe in it, just, maybe this is something that says, hey, I'm going to put 1% of my, portfolio into Bitcoin, and worst case scenario, I lose 1%. Best case scenario, this 1% is now 5% of my portfolio, and you just move on. So take a look. That's all I got for today, guys. I hope you guys have a wonderful day, a wonderful night, and I'll see you next time.